Welcome back, everybody. Today, I want to take a look at basically the averages, and I want to take a look at dollar index, and we are going to focus on higher time frame charts. And then I just want to quickly glance over a very important concept that will help you in your trading, but this specific concept is also, it's going to vary from person to person which one you choose, which because we're going to be looking at two specific approaches to trading, and these are specifically gonna deal with how you would execute your model as a trader, what would be easier for you to see. And ICT does explain this, and I believe this was one of the things that when ICT talked about the concept, I was already studying this concept for quite a while, so I already knew which type of trader I was. But it made a couple of things click into place, and it's also a concept that you want to use when you're looking at a daily chart or a weekly chart or even a monthly chart, or even looking at a 15 or a 1 minute, once you have determined bias as well as the narrative. It's something that you really use, and it kind of just, it hints at you, and it sometimes it gives you clarity on if I am going to be expecting a retracement or will I be expecting a continuation, or we might be sitting and it might be consolidating because we are between certain levels. So we'll get to that, but first I just want to run through and give you a breakdown of what I see in terms of, as far as bias, or what we are going to do in these markets. First off, we are looking at a Dixie chart, daily chart. Now we already have some predisposed levels on here, and initially I was looking for price to trade down into weekly fair value gap, monthly wick consequent encroachment. Let's just go up into a weekly chart. There's the weekly fair value gap. I was looking for that specific fair value gap to be traded. Let's just look at the price action in this area. You can see that this is basically consolidation, a lot of back and forth, and we took the sell side before we ran back up into this weekly gap up there, and we tapped that, and we tapped basically back into this wick and order block, and then traded down from there basically into this order block fair value gap over there. Just to clarify, let's go over to a monthly chart. Again, we can see this back and forth price action, which is a lot of high resistance to just get through all of this. My focus immediately went onto this wick, big wick. I took the consequent encroachment of this wick, and I was looking for us to trade into that. That's the obvious one for me. And then we also have this fair value gap over there, which I did not take note of yet because we haven't traded below this candle's tail. And shifting down to a weekly, I would want to see price trade below this weekly fair value gap, and then I would want to see price use that level as a inversion level, and then I would go up to the monthly, and then I would note this swing equal lows, which is on a weekly it's a equal low, so I would just note this equal low down there, and there is a slight fair value gap over there. So as far as current price action, I noted, let's go down. Before I go down, we have a weekly fair value gap over here, which noted in the green line. Down to a daily. So you can see we hit that weak consequent encroachment, price rejected, and we subsequently started trading back up higher, back above the weekly fair value gap. We traded into this daily fair value gap, overlapping with an order block sitting right there, and we rejected that, going back into this fair value gap. We now have gapped up higher, and price has opened above this fair value gap. I expect price to retest this, which it has done today, and we have this weekly fair value gap above us, so we have to be mindful of this level. We could still go into 50% of this consequent encroachment of this fair value gap, and we could turn around and reverse. We also had daily equal highs in this area, which we already did tap, and we did tap into this weekly fair value gap. So the possibility of us, like I said, I want to see price, since we traded above this fair value gap, if we remain bullish, then I want to see a retest, and I want to see us ultimately trade above this high into this daily fair value gap, and from that point on we need to see how price reacts around this weekly fair value gap as well as this daily fair value gap. We're just in between all these levels right now, and this could lead into a consolidation market profile where we have a bit of a consolidation before price then shows its hand to us and ultimately reveals what it wants to do. So you got to be careful in a way. You got to be really careful, be mindful of what you do. Basically, this to me determines that we are in a scalping market or a day trading market, scalpers market, short-term market, where you just, I wouldn't really say short-term, I wouldn't even want to say really day trading, because day trading you do need a one-sided solid bias to be able to really hold on to that position for that specific day. But I would say that this is more a scalpers market where you trade into this daily fair value gap, and you, as soon as you get the rejection on lower time frame, then that would be a confirmation that you would be able to go long. As you can see there, we traded into it and we traded away from that level. That happened. I am using the New York time on TradingView, if you are wondering. So you set your chart to the same thing and you'll see what I am seeing on my charts. There is this weekly fair value gap level, I believe. Yes, this is the low, and we also have these equal highs on the daily. So this move over here on Wednesday around about 2 o'clock, beautiful PM session coming in, open up, took this high. I would look for a breaker block over here in this candle. And as you can see, price tapped into that level quite a few times, but never rallied away from this level. Just ultimately hung around this level and started trading down lower, lower, and lower. Basically consolidating around this level before dropping down. Let us glance at the 1 minute. Let's see if we can find a setup on that. I believe we should be able to find a setup on that specific. Here we go, 2 o'clock. There we go. We also had a morning session set up here. If you were expecting price to trade up higher into this weekly fair value gap, clearing these highs also on there, that daily equal high level that I had to the left. If we take a look, not much going on here early in the morning. Market open 8:20, 8:30, not much going on. Is a bit of a move. I don't see this as anything that I would have wanted to take any trades upon. But when we come over to this and we look at the 10 to 11, it starts to really clean up. Price trades all the stops and takes everybody out that was long beforehand. And we have a beautiful inversion level right there. If you take that level, you extend that level over. We also have a breaker with a low and a lower low there. You take this up candle, you extend those. You can see we were inside of these up candles. So that's a beautiful breaker block trade. Low right there. Stop would be below there, and your take profit would be, you can look at, we can quickly draw a fib. Let's draw a fib on the stop hunt. Let me turn this around. Let's put it on candle body, since this is quite a bit of a range. Body high to body low. Let's say we were looking for a target above the weekly fair value gap. Let's just crunch this up a bit. See that? There we go. The consequent encroachment would be there-ish, right about there-ish actually. We are in times where the market doesn't move too much. Really nimble. You got to be nimble, and you go in, take what you need, get out of there, and be happy with that. If I was looking at this, I would have looked to this half a deviation. Let me just move this over a bit. That 102.6 level, 102.63, that's a great area to take a partial, because it just overlaps with that fair value gap low level, overlaps with that. And the one standard deviation, 102.72, that would be another fantastic place. But you can see we never got up there, so we never traded up there. But if you were still in the move, we traded that fair value gap, respected that, traded up higher through one more time. You could take something off there. It's close enough. You could even take half of this range from here to there. You can take half of that, and you could take something off right in there. That's a beautiful area to take a partial, and that is in the 10 to 11 silver bullet. And you would be looking at an inversion level, which would be an inversion fair value gap entry on that level. Now, none of us trade the DXY, but it's just good to look at these things and see what price gives you, and look at your specific model or ways that you would have traded this specific situation, and you can put these in your journal. That's how you practice. Now, looking at the PM session, with this one over here, this is more of a bit of a complex one. I would say low, higher, high. So this candle right there, that's your breaker block. Take it up to the low, you extend it through, you do get an impulsive move down. You took out these guys, all the stops above that. You know this is above a daily equal high, this level. You took the stops out there. Target's going to be this equal low down there. My eye just goes right to that and that low there. You also have a order block. These 3 consecutive up candles, that would be an order block. You can see we didn't really trade back up into this. We also had a bit of a gap, which we did trade into the gap. You can see that candle is slightly, let's bring it up. You can see this candle here is slightly higher than this one. So we did go into this gap. We traded into it. We did have a nice little move down there, not really taking out this swing low, but an impulsive move nonetheless. Now, if you didn't find an entry in this section of price action, I wouldn't want to look. If you were gonna be a bit more, now this is for the more seasoned student that's been studying ICT's concepts for a little bit longer, then I'm gonna disregard this wick, and then that's gonna be my high, my higher high, and then I'm gonna be looking at these candles as my breaker block. And if I extend that through, then you see that it gets hit right there. So there's 2 ways of looking at that. And you have the fair value gaps, 2 of those there, which get traded right there, and that's an institutional order flow entry. It's in a really deep premium because we're right inside that weekly fair value gap, but we're also above those daily equal highs. So that's a really deep premium level. It's if you get a position in there, the stop, perfect position to put the stop is going to be above that high. Give it some breathing room. It's safe up there. You shouldn't feel any heat whatsoever, and you didn't. It price rejected immediately, reject down lower. Now that's where we get another fair value gap right there, and you can see we traded up into that level over there, the last time over there. And if I look at this candle here, then this, I would use this one as a, I would use that as a mitigation block as well. This one, you extend that out in time, extend it through, then you see that gives you a breakaway gap at the same time. So price never really filled this fair value gap up. It kind of gave you a breakaway gap as well. So that's another confluence that when you're in this trade, that you can look at that and you can say, okay, that's a breakaway gap. So we are really pushing down. We're really going to be bearish in this. I want to see price quickly reach for these equal lows right below there, and as well as this low over there. And then we have this low over there. We have a whole bunch of fair value gaps down there, and as well as we have an inversion level right there, which just happened to nail the low here. So you could have taken that entry there, and after that, price did here give you an order block. It traded below the order block, and in the very next candle, it just kind of gapped up, retesting it and then trading down. It gave you one last retest right there if you're gonna really look at that, and then that would be a last entry before it tanked down lower and it tapped these equal lows, which that's a wonderful area to take a partial. Take a partial down there. If you didn't take one there, this is a definite, a must take a partial right there level. And then we have these fair value gaps as well as this one over there, inversion, extended through and price hits the low. Now this kind of touches on the topic that I was talking about when I started the video, and we are going to be talking about external range liquidity to internal range liquidity, as well as internal range liquidity to external range liquidity. To put it in a simpler way, we are going to look at fair value gap to equal low, or equal low to fair value gap. Now in this specific example, we are looking at equal low to fair value gap. In a sense, by equal low, I mean stop hunt external range liquidity to internal range liquidity. So we clear the external range liquidity, and then we look at targeting internal range liquidity to get out of the position. So that's one way that you can look at that, and we will look at a few more examples. So if you feel overwhelmed by the information, just go back and listen to it one more time and look at the examples that we're going to go through, and it will be clear to you. That's an equal highs. Look at that, beautiful. Look at the candle bodies. These candle bodies just stop dead in their tracks right there. Beautiful, beautiful price action. Also remember, and I'm quickly going to go up to a higher time frame to show you this, so that you don't get lost in the idea. But remember, we had daily equal highs, and this is the low of this weekly fair value gap. It's overlaps with daily equal highs. Let's go up to a daily, just so that everybody's on the same page and there's no confusion about this. Equal highs. So we took this liquidity, we tapped into the bottom of this weekly fair value gap. So that sets up a perfect stage for a retracement, in a sense. But the main factor, the most important factor about this whole trading idea, and this is one of those notepad moments. If you don't have a notepad out, then go grab one now, because one of the most important factors is the fact that time of day, New York session, PM session, 2 o'clock. Okay, time of day was in alignment, and then we had higher time frame daily equal highs were taken out. So we took out a higher time frame level of liquidity. We were in a premium, but number two, higher time frame liquidity was taken. Time of day, price, that sets up the stage for a potential trading idea. So those two things are very important. Now you understand time, and price, because I just explained it to you. And then you can go in and you can look at these ideas. And this would be external range liquidity to internal range liquidity. That will be it. So equal highs to fair value gap. Possible reversal idea. So that's one to look at. And then we also had this one in the 10 o'clock. We also had this idea, right? Now that's 1 second. Let's look at this idea again now that we have everything in perspective. I was looking at this price chart right there. Price was going to be reaching for this equal high as well as this weekly fair value gap low, right? So keep time of day in your mind in perspective. Let's look at the breaker block. It's a breaker block. And then we also had this inversion. Now we can get really technical and we can put a fib on there and we can find the consequent encroachment. And you can see price was hanging around the consequent encroachment level of this inversion level. Okay, so let's just, for the sake of the video, inversion, and let's put that text at the bottom. So that's an inversion, the blue lines, and that is the breaker block right there. Low, lower low. You take your up close candles, extend those out in time. So we were looking for bullish prices. What was in alignment? Time of day. Time. Again, time was the important factor. 10 o'clock to 11 o'clock. That is ICT's silver bullet time frame. So time of day. That was the first thing that we look at is time of day. That sets up the stage for a potential move. So we had time of day, and then we had price. If we look at price over here, let's for a quick second go up to a 15-minute time frame. Let me just find my bearings. Let me find myself over here. 10 o'clock. I don't see much on the 15-minute over here. But I do see these two equal lows that we took out over here. And we also took out this one over there. And I almost think we have a slight, we do have a slight fair value gap right there. So that would be a very, 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 very small little fair value gap. Let's just bring this over. It's a very, very, very small level. Let's for one moment go to a 5-minute chart. Let's just find that specific price move. Look at this beautiful equal low right in that same area over there. We also had an order block over there. Those consecutive down candles, order block. So we can look at that as well. And we barely just didn't hit that. We need to take the wick in consideration over there. There we go. Let's just name that 5-minute order block for the sake of the video, and this was a 15-minute fair value gap. Let's go back to that 1 minute chart. Let's go look at these levels. So if we look at these levels, what did I just outline? What I outlined was, number one, price traded below these equal lows, this low and that low over there. But I went on to a higher time frame. Point number two, price needs a higher time frame level. You need to have the higher time frame backing up your trading idea. Write that down in your notepad. Very, very important. You need to have the higher time frame backing your trading idea. Price traded into this 5-minute order block, 15-minute fair value gap, and it immediately came right back above it. Coincidental how it tapped into it one last time, huh? We then traded up higher. So looking at this, I have absolutely nothing, but I have an inversion level. I have a possible breaker block level. If price respects these levels and it trades above these levels and it retests, then I have something that I can work with. So price trades up. What comes into play? Time of day. Time of day, boom, snaps into place. Then you go and look at why price reversed there. When it reverses, it trades up through the high, so you have a market structure shift quite impulsively. And look at this now. There's a fair value gap right there. Traded up, it gapped up, came into the low of the high of the inversion, really traded up higher. Came back down, retests the high of the inversion level once more. Traded back up. One last time, cleared these equal lows. Came into this order block. Came into the breaker block. Consequent encroachment of the inversion level. Boop, boop, boom. Beautiful reaction out of the level. So you could take an entry right there. You could take an entry in this candle. You could take an entry over there. Price stops like a brick wall. It stopped. Entry, the stop would be below the inversion level, below the breaker block level, basically. From there on, we trade above those daily equal highs as well as into the weekly fair value gap low and above all these highs. Now again, we can take the fib and we can measure and we get the 0.5 level, which I think we did this, and we get our confluences over there just for a bit of a confluence on where we would take profit. But you would ideally look to take something off above these highs and look to take something off at this low level over here because price could reverse. Now what happened in this trade? In this specific trade, We never went from external range liquidity to internal range liquidity, but we went from internal range liquidity, fair value gaps, fair value gap, inversion level, to external range liquidity. That's the light bulb moment. So you get internal range liquidity to external range liquidity, and external range liquidity to internal range liquidity. Those are your two different levels of liquidity. Now we can go back up to a daily chart, and we are done with dollar index. We can move over to NAS. As far as NAS was the first chart to take out this low and give me this market structure shift. We have a breaker block sitting in there as well. We have a daily fair value gap over here, which we traded through. We have to see how this closes, and then we have a monthly fair value gap sitting right there, which we are about to tap into that. We also traded into a, what is this, daily order block. Yes, that is correct. This was an order block, which is now failed. So that is a breaker block now. So that is now no longer a valid level. And we have a weekly order block on this side. Let's go up to weekly order block. There's the weekly order block I used to extend it out in time. I was looking at that weekly fair value gap over there. Extend that in time. And then on a monthly, there's the fair value gap that I was looking at down here. So there you have all the levels and why they are where they are. And quickly moving back down, these were inversion levels. There's the inversion level, and then we had a fair value gap level as well in there. This was a daily fair value gap, just by the way. And we're looking at how this one closes now. But NAS was the first chart to give me this bullish stance. And if NAS is bullish, then ideally I want to see a, if NAS is bearish, excuse me, then I want to see a bullish dollar. But we're at these weekly levels now, and price could just tap them and freeze like a wall. Weekly and monthly levels. So it's a tricky situation to be in, and we have all these levels right stacked up against one another. So you got to be mindful, but this is definitely bearish. We already shifted market structure on this. I want to see a close below this fair value gap. Do we get an inversion level where price tests this and then trades down lower and aims for these lows down here? So this is the line in the sand, this daily fair value gap. If we close below this and we retest, then I want to see a move lower on this pair. But the line of the sand is this daily fair value gap. We need to see how this candle, how this day closes. And from there on out, we can trade according to that. Moving over now to the E-mini S&P chart. Let's see over here. These were lower levels I was looking at. The same thing happens over here. We have that old low over here, which would give us a market structure shift. We also have this daily fair value gap, which it's just now trading into this. and we had a weekly breaker block, a monthly wick consequent encroachment, and a weekly old high. Let's just go up to these levels so you can see these level weekly old wick. There's the weekly old wick. What do we have over here? Monthly. What is this? Weekly breaker block. Which one is it now? Breaker block. What is it? Weekly breaker block. Yes. We had the high, low, higher high, down candle, extended through, breaker block. Monthly time. Again, that is a, you're not gonna see that breaker block if you're just, you gotta spend some time with breakers if you're gonna see them in more advanced. Then we had this monthly wick. What is that? It's the weekly break. We had that monthly wick consequent encroachment level, right? I immediately saw this wick. So that weekly old high is basically a monthly old high as well. I immediately saw that wick and I took note of this wick. So these are your levels. Just for sake of clarity, there's that fair value gap level over there, and whole bunch of lows that resting down below their fair value gap there. So again, this fair value gap is the line in the sand, and how we close, how we trade around it, will determine what we will do next. So let's focus on internal to external range liquidity and external to internal range liquidity. Looking at that concept, if we look at this fair value gap, we traded external range liquidity into the weekly breaker block, monthly wick, consequent encroachment, right? Then price came down. So once it started coming down, we could look at, okay, this is traded external range. It's going to go to internal range liquidity. It came into internal range and then went back to external range liquidity. It boils down to the idea where ICT says that price is either trading above all highs or below all lows, or it's retracing back into fair value gaps or imbalances. It's rebalancing, or it's going to consolidate. That's it. It can only do one of those three things. So price traded external range liquidity, but now we're trading back to this fair value gap again, where we could react. We have to wait and see how price reacts before we can really make a decision in this. If we trade below this fair value gap, then I am short 100%. And then in that case, we would be looking at a scenario where this is external range liquidity back to internal range liquidity, in a sense that we would be trading back to this fair value gap. But if we break this and we retest this and we go lower, then that would be internal range liquidity back to external range liquidity, in a sense, because we have all lows. So what's resting below those all lows? Stops are resting below these all lows. So we're trading from external to internal, and now we have to wait and we need to see what price does next before we can really engage with this. Look at all this. This was all chop in there. Really, really high resistance liquidity run to get through all of this. Looking at the Dow, lastly, I had some daily old highs over there. We had a monthly all high. We have a weekly wick consequent encroachment. We have this daily fair value gap, which on this pair you can see we didn't even trade down lower. We traded into the order block mean threshold and we reacted off of that level. And we've been trading higher for today, but really sloppy, unclean, messy price action. Monthly equal highs, which we traded over there. Let's go up to a weekly so we can look at all these levels. Weekly breaker block, low, high, lower, low. Up close candle, breaker block. Monthly equal high right there. This can now be disregarded because we are not using that level any longer. Monthly wick consequent encroachment and monthly all high. We also have a monthly fair value gap. Oh, this is weekly levels. Hold on, monthly. There we go. Monthly old high. There we go. Monthly old high. Excuse me. But in a sense, you could go get the consequent encroachment of this monthly wick. And it's going to be around about more or less the same idea as what I have over here. It's not going to be wildly variable from that idea. So this pair, to me, it seems like the averages are not all moving in a tandem, where we have Nas being bearish and Dow is sideways, and E-mini S&P is like the sixth sister, where it's kind of slowly catching up to the Nasdaq, slowly catching up and doing what it does. Maybe the Dow will gain momentum as well and catch up as well, but it doesn't look like it really has gotten that momentum. And dollar being in a confusing place as well. That's why this weekly fair value gap is definitely the line in the sand for me as well. With this pair as well as this fair value gap, it really depends how it trades at these levels and how we will go from there. I wanted to look at, I'm not sure if it was the Nasdaq or if it was the E-mini S&P, where I had more examples of this internal to external range liquidity, and I thought I really had a really nice example of this concept. Oh yes, right over here. I just need to find my bearings for 1 second. Right over here. And this line, we'll get to that line in a second. But what I want to talk about is Tuesday, 2nd of Jan, 2024, 9:30. That is your AM session open. And this is going to be a more seasoned trader's viewpoint, looking at a breaker block, high, low, up, all the way up to that high. There's your breaker block. And you could also look at this inversion over there, overlap that level. You can see price tapped into the low of the inversion as well as it came into the breaker block. Stop would be above the breaker, above the inversion. And let's just quickly find our bearing and see where we are on the higher time frame chart. Let's see, Tuesday 9:27. Let's go up to a daily. Let's find our bearing. So Tuesday. There we go. That was the day we started trading down lower, and I personally expected price to come back into the mean threshold of this order block level. So we would be looking for lower prices as far as a daily time frame. So that gives me a bias. Let's go down to a 15-minute time frame. So for me, look at this low over there, look at that low over there. That's an equal low. So that to me is reason enough to want to be short. I want to be short on that idea. That gives me the narrative that I want for this trading idea. Let's just find our way inside of it. You see that we would be above this. So we would have all this potential lower to get into that equal low on the 15-minute time frame. While at the same time we have bearish prices on a daily, and we expect price to go into the mean threshold of that order block. And most importantly, we have time of day being AM session open. So that sets the stage with time. We have a higher time frame bias being daily was bearish. We would expect reversals or retracements, mainly retracements at first. And in this specific example, we are looking at trading external range liquidity. This would be internal range liquidity to external range liquidity, as we do take out these highs, but we are still inside of a price structure. We didn't take out any lows that are outside of a price structure. So we trade up, we take out these equal highs. So stops are tagged. Time of day is in alignment. We have the higher time frame behind us already. We could go up to a 5-minute chart. Tuesday, let's see. It's always a good thing to just go up to a higher time frame chart and find. I see this fair value gap, but we never traded up into this. We really have these equal highs. That's what we have, equal highs. I can even go up to a 15, so we can just get an extra bit of clarity. Okay, the 15-minute to me is beautiful. This gives me what I want to see. I get that 15-minute order block. We don't want to look at that 15-minute order block. That's, again, it's a very, very good practice to always have price trade into a higher time frame level, and then you expect price to reverse. You can see we traded up into this 15-minute order block, and time of day was in alignment with this, and we had a breaker block, high, low, higher, high. Not a clean breaker block, messy one. The seasoned student will see that, and the seasoned student will look at the inversion level we had. Well, it was just a fair value gap at first, but we broke through, and with beautiful propulsion, beautiful explosive move below that level, also validating the breaker block, and in the next immediate candle coming right up and testing it immediately, trading now lower after also hitting the low of this inversion. Beautiful, beautiful, beautiful price action confluences. Stop would be above there, and I wanted to talk about this move up here. Now, some of you might also see that we have an order block right over there. Price really traded back down below that 15-minute order block. It came back up into this order block. We also had a little inversion there as well. And price just colored outside the lines a little bit, and then we traded down lower as well. So that would be another potential entry, but not really one that I would be looking at personally. And then we had this mitigation block. If we take the mean threshold of this, then we also get a breakaway gap right over there, which we never tested again. And then we traded lower immediately after taking that entry. Beautiful move from internal to external range liquidity. Beautiful little price action move for you. Hopefully that helps you to better understand the whole concept. Trading from taking out equal highs, fair value gap to equal lows, basically, in a sense, because we traded the fair value gap, these equal lows, and that mean threshold of that order block on the daily time frame. There would be your fair value gap, entry, bam, lows right there, internal to external range liquidity. Now let's look at a external to. It's going to be an external to an in. Yes, external to a. No, wait. Internal to external. This is going to be external range to internal range liquidity. So on this specific setup, I would be looking at high, low, higher, high. So again, breaker block, extend that in time. And we also have a fair value gap for fair value gap traders. We have a fair value gap over there. You can see it. That would be an institutional order flow entry drill to get into this fair value gap short, but tapped the low of the breaker block. Stop would have to be above the high or above the fair value gap candle, which you're gonna have to be looking at the second one over there. Also note that I wouldn't look at this as a mitigation block. I wouldn't look at that as a mitigation block. But I would definitely also look at, if I look at this candle and I extend that one, then that would sort of be a breakaway gap as well. And we can see that it didn't react as a breakaway gap as well, because we never filled this gap. We really just tapped it by a tick or two, and then we traded down lower. Now, let's do the same thing. We would still, in this case, be expecting lower prices for that day. Let's go up to 15-minute. Find our bearings. Yes, beautiful. In this specific example, we were sitting inside of this fair value gap. So as you can see, I always try and look for a level. I always find a level. Now this would be internal, yeah, range liquidity right there. To me, this 5-minute fair value gap. Okay, well, that's fine. We can look at a 15. Let's just glance at the 15-minute. The 15-minute, I wouldn't say that it's as clean as the 5-minute in this case. But I would be looking at this wick, and I would say consequent encroachment of this wick, and we were hanging around the consequent encroachment of this wick. But let's leave the fair value gap in play. It's just easier for most people to understand it because you can clearly visualize the level. Let me just, for the sake of the video, 5-minute fair value gap. So this was the line in the sand for price. It hit it like a brick wall. And we had equal lows, more relatively equal lows, fair value gap, fair value gap, order block, fair value gap, low, lower low, breaker block right there. So there's a whole bunch of confluences down there where you could look at taking your profits and partials. Definitely. Okay, we only entered the trade below those lows. So we would be looking at scaling something off in this fair value gap. Barely, almost just got hit over there. Or once we trade into it over there, you would scale something off. We had this wick. That wick is another beautiful point of taking a partial. We had these little lows over there. That's another one you can take some partials. We had the order block. First of all, we had the breaker block before we had that. So that is a point of partial. And then we had the fair value gap. We had the order block overlapping. That would be terminus. That would be terminus. So looking at this idea, we again had our time frame. First of all, looking at time of day 12:50 to 1:10. That is an ICT lunch macro where we retrace and take the stops. So that kind of adds confluence to why we only retraced here back to internal range liquidity. From external range liquidity to internal range liquidity. So 1250, look at that. 1249, 1250, we tapped it there. One last go, and it rallied it down. So time of day number one, everything was in place. Higher time frame, we were looking for retracements. The narrative in play was that price was gonna trade below these equal lows, those lows, that wick, breaker block, order block, fair value gap. That gives me a narrative that I want to see lower prices. And we also had price trading into this higher time frame. 5-minute fair value gap. It stopped there. So it started up setting the stage for this possible breaker, which we were able to identify beforehand. And then we had this beautiful fair value gap over there, and then we executed a short and we took our profits down there. So external to internal range liquidity, internal range liquidity to external range liquidity on this swing. And I'm not going to look at this one. You could get an entry over there, trade it down to their internal range, external range liquidity. You could get an entry with this. Takes out these highs, internal range, external range liquidity. And that would be the New York PM session. I see a beautiful breaker block right there. High, low, higher, high, extended through in time right there. 250 to 110. Beautiful macro, 250 right there. Entry would still be valid. Tapped it one last time. Traded down beautifully. Internal to external range liquidity price swing. So let's close this video off. So hopefully now you have learned how to implement using internal to external range liquidity and external range liquidity to internal range liquidity. If price traded from internal range liquidity to external range liquidity, then you expect price to then give you a possible retracement from external range liquidity back to internal range liquidity, and then price could either completely reverse or price could continue its bullish trend, and we could go back from internal range liquidity to external range liquidity. It's a really nice concept. It's a bit confusing in the beginning. It takes you a bit of going in, practicing it, seeing it, journaling it. And if you eventually understand this concept, it's a beautiful concept to apply to your trading, as it's something that gives you a foresight into being able to expect retracements or possible, I wouldn't say reversals, but retracements could turn into reversals, like we are looking at this, and we might end up getting a reversal from this, or price could possibly go into a consolidation when you have a lot of higher time frame levels just overlapping one another. And those are times when you sit on the sidelines and you wait for price to show you its hand. Wait for it to show you what it wants to do next and find something that you can interact on off of a higher time frame to get that bias. You need that bias first before you can really start going back into it again. And that's where you practice patience, and that's perfect for you to sit down, to study, and it's the perfect time for you to go and start working on your journal and practicing your ideas. Hopefully, you have learned something in today's video, and analysis videos should resume as per normal from next week, Monday. We will be resuming those, and although the market is still not 100% back to normal, if you let's quickly go ahead and look at the economic calendar. Factory Forex Factory, let's open the calendar. Forex Factory, if we quickly open up the calendar, we have NFP today. And if we look at next week, we don't really have much going on Monday or Tuesday, even Wednesday. Only Thursday we have CPI and then PPI on Friday. So only Jan the 15th, we have a Monday, we have a bank holiday. So you don't want to trade that. Tuesday, you want to stay out the day after the bank holiday. Only on Wednesday, you can go look for possible trading setups for retail sales, industrial production. And Thursday, we have unemployment claims. And Friday, we have some consumer sentiment. This is starts to return back to normal. But anyway, hopefully you found this insightful and useful and you have learned something. And until the next one, good luck and stay safe.